Good afternoon, ladies and gentlemen. Welcome to this panel discussion. IPO, SPAC, M&A are seen by companies as powerful growth engine to boost their revenue and scale. Let me show you a graph. It's just the data you see on screen is extracted from Deloitte's 2022 M&A Trend Survey, a global study with On Research that interviewed 1,300 executives in private equity firms and companies with revenue over $10 million. You can see from the survey data that many companies are exploring alternatives to traditional M&A for their corporate transactions. Although traditional M&A strategies are popular in life science industries, however, for all other industries, you can see that they are looking for alternatives. Today, we have an amazing panel of thought leaders from regulator, investment bank, venture capital, and even Web 3.0 arena. I can't wait to hear their views on options for tech companies and their investors in this challenging market condition. So let's get right into the discussion. Most technology enterprises require substantial capital for research and development prior to their commercialization. Could you share how existing capital market infrastructure can help them raise these funds? Maybe Paul, could you share with us your idea? Okay, hello, Michael.
Yeah. Sure, thank you, Philip. It's a very timely question. Just last week, HKEX published a consultation paper on expanding Hong Kong's listing regime to permit listings of specialist technology companies, helping them raise funds in the public market as listed companies, just as you mentioned, to support R&D investment to bring their products and or services to commercialization or to scale up their business. So this proposed chapter define specialist technology as science and or technology applied to products and or services within an acceptable sector of a specialist technology industry. And there are 5 specialist technology industries, namely number 1, next generation IT, for example, cloud-based services, artificial intelligence. Number 2, advanced hardware, so it would range from robotics and automation, semiconductors, advanced communication technology, electric and autonomous vehicles, advanced transportation technology, aerospace technology, advanced manufacturing, quantum computing, and metaverse technology. Number 3, advanced materials, synthetic biological material, smart glass, nano materials, for example. And then number 4 is new energy and environmental protection technology. So it will be, new energy generation, new energy storage and transmission technology, new green technology. And last but not least, the 5th one is really new food technology and new agriculture technology. Now, these 5 industries are very varied they vary in nature, and we do acknowledge that changes to our list, to this industry list, and acceptable sector are likely to be expanded. So these new industries and sectors will emerge over time for us, and we'll from time to time review it. Now, one of the main reasons for this proposed chapter is really to enhance our market competitiveness. And we had been encouraged by the success of our diversification of the markets following the 2018 listing reform. And so we intend to further enhance the market to keep pace with the US and mainland China, which attract a large number of these companies belonging to what we call the specialist technology industries. And during our preliminary discussions with stakeholders, most commented that this specialist Technology companies present investment opportunities with high growth potential that have attracted substantial investments and significant sophisticated investors in these private funding rounds. So therefore, they should also present a good investment opportunities for investors in public markets as listed companies. So very timely question indeed, Philip.
Okay, thank you, Michael. This is really an important new page for capital market. Maybe Paul, from investment banking perspective, do you have any share with us?
Thank you so much, Philip and Michael. I'd just like to supplement a few lines. I've been in capital market for 26, 27 years. I think when we talk about how the capital market can serve technology companies in terms of their fundraising needs, I think basically two major parts, right? One is the capital market generally refers to the profit side. So on the profit side, I think Hong Kong has been consistently innovating itself. Back in 2015, I joined the listing committee of Hong Kong Stock Exchange. I finished my term last year. But before that, technology company will also include biotech company. So now we have a very successful 18A chapter in Hong Kong. So that is really, really good. Following Hong Kong's launch of 18A, we've seen Shanghai has launched a biotech chapter. And now Michael just talked about the 18C. Elsewhere, Shanghai also has Startball. So what I want to say is that the technology companies should explore their options as to where is the best to raise their fund. And obviously, I think Hong Kong has a very strong appeal to the technology companies. Now, I want to share a little bit on the private side, unlisted company or unlisted fund. I think apart from the venture capital and private equity world, I'm particularly delighted to see Hong Kong government to set aside 30 billion on the co-investment fund to invest in enterprises who are able to set up their business here in Hong Kong. Obviously, we want to see more details out of it, but I think that is a major, major milestone as well. So I think that should be really, really helpful for the technology company to explore these options. Thank you, Philip.
Okay, thank you, Paul. I know that Israel has incubated a lot of successful technology companies, and its dynamic venture capital investment ecosystem attract lots of global investors. Hi, Denes. Can you share with us from your perspective, what is your observation in the market?
So good afternoon, Hong Kong, from sunny downtown Tel Aviv. It's really wonderful to be here. So maybe just historically, if you go back a little bit. So, 2.5 years ago, March, April 2020, when, everything was crashing, everybody was guessing what will the recovery look like. Will it be a V-shaped, very, very quick recovery? Will it be a U-shaped, meaning very slow, or it's going to be an L-shaped, which means it's going to maybe not come back? And the best description I saw was actually somebody came up with it, which was a Y shape, which means a V, very quick, like Zoom and its friends, the real tech companies, and then there is an L, which means those companies who didn't digitalize, and they basically didn't come back. Now, 2 years later, after a phenomenal, 2021, we are again asking the question, how long this is going to take? It's definitely not going to be a quick recovery, a V, right? 50% of NASDAQ is down with more than 50%, and if you look at the SPACs, even more. But now, I'm a venture capitalist, right? So when it comes to private markets, the scenario is very, very different. It seems like there is a total disconnect, right? And the reason for it, that on the private markets, the valuation adjustment usually has a 2 to 3 quarters time lag. Now, because companies raised so much money in 2021, this even extended now to 3-4 quarters. And actually what we saw in numbers on the private markets, that really the major adjustment started in Q3. This is also true for Israel, by the way, but in a much less extent. And if you are a private VC investor, like me, we do two things, right? You have a defensive focus, meaning on existing portfolio, and you do constant health check and try to, help the portfolio bridging them. But at the same time, on the private markets, you go totally offensive because the best deals surface in these times. So obviously, you need to have a stomach to it, and you have to have a risk appetite. But usually when you invest in these times, and you only have a couple of these cycles in your lifetime, this is the time to really go in. And Israel, again, it's a little bit of microcosm of what's going on in the world. We have seen 100 unicorns, which is basically almost 10% of the world's unicorns coming from Israel, and the highest per capita investments coming into Israel. But we see in Israel, the adjustment is actually much lower, much smaller, and the reason for it, because it's much less B2C oriented, retail oriented, it's much more deep tech and much more early stage oriented, which is much less affected.
Okay, thank you, Denes. Probably the valuation adjustment may be an opportunity for investor as a whole. Apart from direct listing on capital market, many tech company actually right now they are looking for alternative, such as de-SPAC and M&A. Actually, how these options adjust the fundraising list of this tech company, and how can they meet the Hong Kong goals as a international financial hub and technology hub? May I invite Monham to share?
Yeah, thank you for having us. Look, I think when we look at alternatives to IPO and we talk about M&A, the one thing I will say is that obviously M&A invariably has a strategic nature to it. Most founders and management team are open to alternatives idea in this market, but when you think about M&A, you'll typically think about synergies, maybe sort of expanding in new technology on your market, maybe teaming up with a larger group with a balance sheet. So M&A typically is more for a strategic compared to an IPO where you're effectively going it alone. You raise capital to grow, to invest in your R&D, or maybe use it as a currency to fund your own M&A. Look, the SPAC, in my view, having worked on it, has always seen it as a hybrid. The end result looks like an M&A, but then kind of the middle in terms of the sausage making looks very much like an M&A product. And it's an alternative, obviously. We see some attractiveness there in terms of the process itself, but it's clearly that now in terms of management are very much open to consider all those options. Now, the second part of your questions around Hong Kong, in my view, it's all about ecosystem. We hear that from before, and I think some of my fellow panelists will agree to that. So when we look at sort of funding, we need to think about companies that you need to fund are attracting innovators and attracting founders, but giving them the hardware and the software. We talked about the fund that the Hong Kong is putting in place, but that's just enough. We need to make sure we've got the VCs, the private equity, but as well the angel investors, especially early stage. So do we have the family offices, people coming and setting shop? And then obviously, do you have access to the talent pool? So you set up a company and you need to do R&D. Do you have access to these engineers, this PhD that's going to help you to create that technology? So it is about the whole ecosystem. And Hong Kong, historically being an open society and a welcome society, in my view, is very well placed in terms of winning that competitive attractiveness across the region. And maybe it's not just Hong Kong. Obviously, Hong Kong has benefited from China, the Great Bay Area. So it's got a lot going for it. Okay, thank you, Monham. Hi, Paul. From your perspective, do you have any more thing to share with us?
Yeah, thank you, Philip and Mohan. And I think on M&A, do we have the slide on, or it's later on, right? Yes. Sorry, the M&A one. There's another slide on. Yes. So this I put together this slide, but not going to go into detail. But in an environment like this, what I would like to supplement is that the technology companies need to think a lot harder in how it can create strategic value to the business partner, in its ecosystem. Let me use an example. This is part of my daily job. I talk to entrepreneur and technology companies a lot of time. And quite often that, party A will have internet traffic. It's a platform company. Lots of internet customers on the website. And party B will be a technology solution company, a SaaS company or others. So this day, I think it's very important for the two sides to think about the strategic benefit of working together. And quite often I encourage the parties to think about setting up a joint venture. I mean, joint venture is one of the examples of these strategic options. So when we talk about raising fund, we can be more innovative. We can think about setting up a joint venture with your business partner where both sides push, let's say, invest into the joint venture, and this share your part of the burden by the technology company. So I think M&A, including joint venture, is a very important form of raising fund in an environment like this. So I would like to use that example. And we can go to the next slide. When we talk about, de-SPAC or M&A, these days we often talk to our clients on, whether a dual track strategy or even a triple track strategies, whether we conduct IPO or, de-SPAC or M&A, we need to conduct some certain DD, and at a certain stage, when you get closer to a time where we need to decide, then we will advise on the client based on the market circumstances, whether it's best in the client's interest to do a M&A or is to do a IPO versus a de-SPAC. Now, I understand this is quite a complex topic, but so my key point really is that, companies need to think rationally and get the best advice and to decide what is the best to do in the current environment. So that I think is worth considering. Thank you, Philip.
Thank you, Paul. Particularly for deep technology companies, it typically requires longer terms of investment commitment from investors. And they typically sought funding from private equity or venture capital. And will the new fundraising options in the public market become an essential sources of finance for this type of deep technology companies? Could our panelists share their views with us? Probably, Denes, could you share from your international perspective?
Yeah, I'm sure. I'm sure we heard what Michael said, which is absolutely wonderful and very, very interesting what the Hong Kong X is doing now. I mean, if you look at, the US, we witnessed this year, there's no new, it's not news that, there's a shutdown of basically the IPO and the SPAC pipeline. And by the way, and the SPAC phenomenon had really the promise of, especially for many of these deep tech companies, we probably, I think we had 5 or 6 SPACs on our deep tech companies. They really had a promise of restoring a broken IPO market, right? The number of public company listings in the US really halved basically over the last 20-25 years. However, this whole SPAC phenomenon, it turned out that it was really driven by, near zero interest rates, right? So it's pretty much crashed. And I still think that for deep tech, and I hope I'm not too much of a pessimist, but it really, for deep tech venture-backed companies, 90% must rely on, or maybe 80%, 90% must rely on the M&A market for exit. And by the way, we saw it at the largest acquisition in venture history, I think, is what we saw a couple of weeks ago with Adobe's acquisition of Figma for $20 billion, should it pass regulatory scrutiny. What another thing, two more interesting phenomenon that we witnessing on this market. One is that I think what we don't see on the surface is actually secondaries. I think secondary can bring real not just liquidity, but financing for these companies, and actually we don't see them because it's a secondary transaction. So I think that we're going to see much more of this kind of transaction. And then other phenomenon, which is really interesting, that in the last couple of years, what we saw that hedge funds, like the Tigers and Friends, entered the private markets. But now what we saw that it's actually happening the opposite direction. So there is kind of, I think, the Washington, the Street Journal calls it like the kind of the blurring of lines, where what's you see that public entering private, right? We saw that what's happening, but now private is entering public. So you know, we see that some of the major venture firms that they are purchasing actually more stocks. It used to happen that, you know, after the lockup period, they sell immediately. Instead, they are holding, or even more, they're buying their own, you know, their own company stocks. But even more so, what we see now with Sequoia, Andreessen, that they actually buying public tech firm stocks, which are not even theirs, right? So these new variables on the marketplace will create actually a very, very interesting new activities that I think we have never seen before.
Okay, thank you, Denes. Yeah, Michael. After the introduction of 18C, do you think that the new fundraising options in the capital market will become a trend for these type of deep tech companies?
Well, based on most of the discussions we've had, or the preliminary discussions with stakeholders, most of them agree that there is a demand for this, you know, a platform for these deep tech companies, or a specific chapter for deep tech regime. And we do expect investors will generally welcome this new regime, given that it does provide a diverse, you know, investment opportunity for the market. And these tailored requirements, you know, under this 18C chapter, should facilitate investors better assess these deep tech companies or specialist technology companies, and attract investments from institutions. And in turn, it will provide these issuers greater liquidity and, you know, trading of their shares and greater fundraising capabilities going forward.
Okay, thank you, Michael. Hi, Alan. I understand Animoca Brands is in Web 3.0. This is a very exciting arena. Do you think that the existing capital market infrastructure can help those Web 3.0 projects? And from your experience, what are the major differences for the fundraising between traditional technology project and those Web 3.0 projects?
First, I think having more financing option is definitely great, especially one that is going to come in Hong Kong just at our doorstep. So I think the industry, including ourselves, is very much looking forward to that. As many of you would know, Animoca has kind of gone through the whole range of financing option. We were a Hong Kong homegrown company listed in Australia and ASX. We were delisted, and then we tapped into VC, we tapped into PE company. So, you know, I think it's quite interesting, and, you know, certainly if the option that, you know, I think right now Hong Kong is contemplating is available at our doorstep, you know, it is something that we very much like to consider. At a broader industry level, I think what's interesting is from a Web3 point of view, while it's still a very early industry, there has been, through crypto winter and DeFi and NFT summer, and now we had a downdraft again, the industry has actually created some very big companies that has over $1 billion in valuation, right? If you look at OpenSea, it was traded, the last financing round was 13 billion, for example. So, you know, I think that now, while it's still in very early industry, many companies are at a scale which, when public market listing would be interesting, when de-SPAC could be interesting, right? So I think, you know, maybe traditionally people, when they think about Web3, they think startup, very small company, but I think through the last couple of years, the industry has got to a stage where there are a lot of large companies where, you know, I think the additional financing option that we're talking about would make a lot of sense.
Okay, thank you, Alan. Yeah. Other than fundraising, we should also take care those petitious investors. Right now, the financial market crash this year has had a big impact in the capital market, thinning overall transaction volume and the liquidity of individual stock. From our panelist perspective, what exit strategies should investor and consider when choosing between IPO, de-SPAC, or M&A? Yeah, maybe Moham, do you have any insight for our audience?
It's a tough question in this market environment. Although we saw an IPO this week with Mobileye, so things are never quite shut. But look, I think there's an interesting thing about secondaries as well. So and I think we should add that, because actually, I cover private equity and VC, and I talk to the LPs and the pension funds, and there's a lot of topic about liquidity and DPI in the private market, not just in a public market. And we're seeing tools in terms of the secondaries being very active as one of them. In terms of we've got to look at a normalized market in this environment, because valuations are quite depressed. So whatever you will consider, you will not get an optimum valuation. Having said that, we do see activities. There's a lot of money being raised in the private side, and I think what you will see is, well, the public markets are probably shut for now, given some of the interest rate environment we are in, and the quantitative easing sort of pullback and so forth. The private market is a very good alternative and fairly vibrant at this stage. I think that's the short term. I think you will have to project on the medium term and think that there is a functioning market. I think the chapter, the 18C, is super important for Hong Kong. I think the biotech is seen as a global success, and hopefully it's a blueprint for the chapters 18C when it comes to innovative companies in Hong Kong.
Okay, thank you. Hi, Paul. Could you also share your advice to our investors?
Thank you, Philip. I fully agree with Mohan. Right now, there's so much negative sentiments around us. I do not need to push any negative sentiment to you guys, but I want to share some positive news. I think deals are being done. There's a transaction last week announced by listed company, about 12.5 billion Hong Kong dollar. The deal is priced at 18 times price to earning multiple. I mean, in a market like this, it's not bad at all. So I think the deal parties have worked hard on the synergies, etc., as we discussed. So I think there are still the hope there. I actually want to put one line, is that on the exit strategy, which is a very interesting point. That how about for listed company? To share with you, we are also working on privatizations.
Okay, thank you. Okay, a final question. Could you share with us what can Hong Kong do to make the market more attractive to global technology companies seeking a listing in Hong Kong? Any of our panelists have interest to address this question?
Philip, maybe I'll go first. I think we've been looking into these issues for a number of years. I think in terms of regulators here in Hong Kong, investment banks and advisors here in Hong Kong. I think the key issues for them is liquidity. Coming to Hong Kong, and whether there's sufficient liquidity for them, and the fundraising ability, etc. So I think it's very important for those companies to come Hong Kong and be able to join the Connect program, which I think is possible for the primary listing right here in Hong Kong. Thank you, Philip.
Okay, thank you, Paul. Unfortunately, that's all we have time for on this panel. We can see that there are many new alternative opportunities for a technology company to raise funds in the existing and coming capital market infrastructure. Thank you for our panelists' great insight. Thank you.